Welcome to the Deep Dive. Today we're digging into something pretty huge, a company that some analysts think is literally building the foundations for, well, the next industrial revolution.
It really is a staggering idea. We've got this prediction from a very influential tech analyst, Beth Kindig, basically saying one company, Nvidia, is heading towards a $10 trillion valuation by 2030, maybe even sooner.
10 trillion, let that sink in. I mean, right now it's around $4.5 trillion, which is already enormous. So we're looking at a potential 122% upside. It's huge.
It really is.
So our mission today is simple. Figure out why. What data, what tech is making people believe this? We're going to look at why the so-called smart money is piling in.
Yeah, it's a fascinating puzzle. You really have to look beyond just the latest stock moves and understand the deeper tech shifts happening. But maybe let's start with that money trail first.
Good idea.
What got Wall Street's biggest, often most skeptical investors to make such aggressive moves?
Okay, let's talk hard evidence. Money talks, right? We looked at the 13F filings. These show what the big institutional players were actually doing with their cash in the second quarter. And honestly, it wasn't just dipping a toe in. It looked more like a full-on sprint.
Yeah, it's the scale of the buying that really jumps out, and the percentage increases. It suggests these managers aren't just seeing some growth. They're seeing, like, a once-in-a-generation opportunity. These are billionaire fund managers. They don't usually make huge shifts lightly.
Not at all. Take Ken Griffin at Citadel.
Right?
He didn't just add a bid. He bought 6.1 million shares. That's a 922% increase in his position. Just think about that number.
900% in one quarter. That's basically shouting from the rooftops, isn't it? And now Nvidia is Citadel's second biggest holding. That's serious conviction based on deep analysis, you have to assume.
And it wasn't just him, right? It wasn't an isolated bet.
No, definitely not. You saw David Tepper over at Appaloosa buying 1.4 million shares. That pushed his stake up by 483%. Now it's his seventh largest holding. And then Philippe Lafont at Coatue Management added almost 3 million shares, a 34% increase, making it his eighth largest position.
So multiple heavy hitters, all making significant simultaneous moves into the same stock. Why should you care about their moves specifically?
Well, it comes down to track record. These specific managers, they don't just beat the market, they consistently crush it. Over the last 3 years, their portfolios collectively have massively outperformed the S&P 500.
How much outperformance are we talking?
The source material noted that even the worst performer in this group still beat the S&P by 38 percentage points.
38 points. Okay, so their analysis, the models they're betting billions on, likely picked up on something fundamental that maybe the rest of the market hasn't quite priced in yet.
Exactly.
So we know who's buying. Now, let's get into the what. What's the technology that justifies this level of, well, financial firepower?
Right. Let's shift from the money to the tech itself.
Yeah.
The core here is the graphics processing unit, the GPU. And understanding how it's different from a CPU is pretty crucial.
Yeah, most people know the CPU, the central processing unit. It's great for running your operating system, handling tasks one after another, running your apps. It's versatile.
But the GPU is different. It was originally designed for graphics, right? Rendering millions of pixels all at once for games. That requires doing tons of simple calculations in parallel, simultaneously.
And that parallel processing power just happened to be perfect for AI.
Exactly. Training AI models, running large language models, it involves masses of simultaneous calculations. GPUs turned out to be the ideal engine for accelerating that kind of work.
And Nvidia isn't just a player here. The sources are pretty emphatic. They say Nvidia GPUs are basically the standard. We're talking 90% plus market share in AI accelerators right now.
90%. And analysts think this dominance isn't just temporary. TD Cowen, for instance, believes Nvidia will likely hold on to this massive share through 2030.
Wow. Why? What gives them that confidence?
They point to Nvidia's leading technology portfolio, their long history of innovation in this specific area, and just the sheer amount they're investing in R&D to stay ahead. It's not just one good chip. It's a sustained structural advantage they've built over years, even decades.
So it's more than just having the fastest chip this quarter. It sounds like they've built something much harder to attack. Which brings us to this idea of a competitive moat. Beth Kindig called it impenetrable.
Right. And this is where it gets interesting, because usually in tech, hardware leads don't last forever, do they? Someone always comes out with a faster chip eventually.
Yeah, exactly. So why is this different? Why isn't AMD or Intel or even the big cloud guys like Amazon and Google who are designing their own chips, why aren't they making a bigger dent if they're throwing billions at it? What's the counter-argument these hedge funds seem to be ignoring or maybe discounting?
That's the critical question. And the answer seems to be that while competitors are trying to build faster hardware, they're not really tackling Nvidia's software advantage. That's the core of the moat. And it rests on two things. Vertical integration first.
Okay, break down that vertical integration. The sources mention rack-scale solutions. Why is selling a whole bundle better than just selling the GPU?
It's about performance and simplicity for the customer. Think about building a big AI data center. You need GPUs, yes, but also CPUs, networking gear, fast interconnects, hundreds of components that all need to work seamlessly together.
Which can be a nightmare to integrate if they're all from different vendors.
Exactly. So Nvidia doesn't just sell you the GPU engine. They sell you the whole car, pre-tuned. They
Right.
bundle their GPUs with their own CPUs, their own high-speed networking tech like NVLink and InfiniBand, and deliver it as one integrated rack-scale system.
So the customer buys the rack, plugs it in, and knows it's already optimized. They skip the whole integration headache.
Right, that creates huge switching costs. Once your massive AI operation is running smoothly on NVIDIA's integrated stack, ripping it out to try a competitor's chip means re-engineering everything. It's risky and expensive. They've shifted from just selling chips to selling, as the sources say, complete AI systems.
Okay, that makes sense. But you mentioned two pillars to the moat. What's the second, deeper part?
That's the software layer. CUA. This is what Beth Kindig specifically pointed to as impenetrable.
CUDA. We hear that term a lot. What is it exactly?
It's NVIDIA's proprietary software development platform. Think of it as the language and the tools that developers use to actually program the GPUs to unlock all that parallel processing power efficiently for AI tasks.
Yeah, why is that so hard to replicate?
Time. CUDA has been around for, what, over 15 years now? Every major AI researcher, every university course teaching machine learning, almost every significant AI startup, and virtually all the big AI models you hear about, they were built using CUA.
So there's this huge existing ecosystem.
Massive. Thousands of specialized tools, libraries, optimized code, all built specifically for CUDA over more than a decade. If a competitor launches a new chip, even if it's technically faster on some benchmark,
They don't have the software ecosystem.
Yeah.
Developers would have to rewrite everything.
pretty much. Or wait for the competitor to spend years building an equivalent ecosystem from scratch, and then convince millions of developers and researchers to switch all their existing work and workflows. The hedge funds are likely betting that inertia, combined with the performance of the integrated system, makes that switch prohibitively difficult and costly for most users.
Okay, so the moat seems really strong. That probably explains the high margins too, right? The source mentioned 69.85% gross margin.
Yeah, incredibly high. That kind of margin reflects the pricing power that comes from that platform lock-in. But okay, even with that dominance today, getting to $10 trillion requires absolutely massive future growth. Where does that come from?
Good question. The sources point towards a big shift. Moving beyond the AI we mostly interact with now, chatbots, image generators, digital stuff, towards something called physical AI.
Physical AI. That's the next frontier, they argue. Think autonomous cars, sophisticated robots in factories or warehouses, delivery drones, intelligent machines actually doing things in the physical world.
So AI that moves atoms, not just bits.
Basically, yes. And the potential market size for that is expected to dwarf the current digital AI market. Nvidia is positioning itself as the provider of the core brains for these systems, both the hardware and the crucial software tools developers need to build them.
Jensen Huang, the CEO, was quoted saying something like, "We build technology that almost every single self-driving car company uses." That sounds pretty fundamental.
It is. It's about becoming the standard platform for this next wave of technology.
But physical AI, things like self-driving cars and truly useful humanoid robots, that still feels a bit futuristic. Isn't there a risk that the tech takes longer than expected or gets bogged down by regulations? Could that delay the growth needed for $10 trillion?
Absolutely. That's a valid concern, and probably why not everyone is convinced yet. But the argument in the sources is that the adoption isn't just hypothetical. It's already happening in critical areas with market leaders today.
Like where? Give us some concrete examples.
Okay, autonomous driving. Tesla is a huge user of Nvidia GPUs in their data centers for training their self-driving models. That's the training side.
Right.
But then look at Waymo, Alphabet's self-driving company. They use Nvidia not just for training back in the data center, but also inside the robotaxis themselves. The actual real-time decision-making, the inference that decides stop or go, that's running on Nvidia platforms in the car.
Wow. Okay. So it's already making safety-critical decisions in the real world.
Exactly. And it's not just cars. Think about logistics. Amazon runs the world's largest fleet of mobile robots in its warehouses. And they use NVIDIA software and hardware to train, simulate, and orchestrate that incredibly complex robot fleet. Amazon's efficiency partly depends on this tech working.
And the sources also mentioned humanoid robots, like the ones from Boston Dynamics, Tesla, Foxconn.
Yeah, companies developing those next-generation robots are also using NVIDIA's platform for development and simulation. So the foundation's being laid across the board: cars, industrial automation, next-gen robotics.
Okay, so the argument is that NVIDIA is becoming the underlying OS almost for the coming age of intelligent machines.
That seems to be the core thesis driving that $10 trillion projection. It's the scale of that physical AI transformation.
Right, let's connect this back to the financials then.
Yeah.
How does this tech dominance and the physical AI future translate into that jump from $4.5 trillion to $10 trillion?
You have to look at the market growth forecasts. Grandview Research estimates that overall AI spending, hardware, software services, everything is set to grow around 37% per year through 2030.
37% annually. That's incredibly fast growth for such a potentially huge market.
It is. And because of that CUDA moat and system-level integration we talked about, the bet is that NVIDIA captures a very large slice of that rapidly expanding pie.
And Wall Street seems to agree, at least in the near term.
Yeah, the consensus estimates are projecting NVIDIA's earnings to grow around 36% annually for the next 3 years. So very much aligned with that broader AI market growth. It's not just long-term hope, it's baked into near-term expectations too.
Okay, but what about the valuation now? The source mentioned 54 times sales. That sounds really high, especially for anything related to hardware.
It does sound high if you think of them as just a traditional chip company like an Intel or Micron maybe. 54 times sales is usually territory for like super fast-growing software as a service companies.
So why did the sources say that valuation is quite reasonable? How do they justify that?
It's because the market, or at least these analysts and big investors, are not valuing NVIDIA like a traditional hardware company anymore. They're valuing it based on the software lock-in from CUDA, the high margins that come with it, and the platform nature of their business. So because CUDA makes the revenue sticky and high margin, like software, and because they sell the whole integrated system, they get valued more like a dominant software platform company.
That seems to be the logic. The market is looking at that 69.85% gross margin, believing it's sustainable due to the software moat, not vulnerable to typical hardware price wars. They see the 90% market share in a market growing 37% annually.
And project that forward, assuming the moat holds.
Exactly. If you believe in the strength of the CUDA ecosystem and the massive potential of physical AI, and you see that consistent 36–37% growth rate, then the path to $10 trillion before 2030 starts to look, well, mathematically plausible at least.
So the investment thesis really hangs on NVIDIA having evolved beyond just making chips into being this essential AI infrastructure provider.
That's the core of it.
Okay, let's wrap this up. We covered a lot of ground.
Yeah. This deep dive really highlighted 3 main pillars supporting that huge $10 trillion idea. First, just the sheer conviction shown by some of Wall Street's most successful investors, pouring billions into the stock, right, following the smart money. Second, we detailed that technological moat, the CUDA software platform, being incredibly hard to replicate, reinforced by the whole vertical integration, selling complete AI systems.
And third, that massive future growth runway coming from the shift into physical AI, autonomous, everything, basically where NVIDIA's tech is already becoming foundational for key players in self-driving and robotics.
It really makes you think about the scale, doesn't it? If NVIDIA's tech is already crucial for almost every self-driving car project and runs the biggest robot fleet on Earth at Amazon, what happens next?
What percentage of the entire global economy, as more and more physical tasks get automated, could end up running on this one company's software ecosystem? From factories to deliveries to maybe even homes.
That's the multi-trillion-dollar question facing industries and investors right now. A lot to chew on there.
Definitely. We've laid out the case based on the sources. Now it's up to you to dig deeper.
Thanks for joining us. We'll catch you on the next deep dive.